Hello, this is Jake Sanders for Wealthy and P's Market Minute. Hope you had a great weekend and the week's off to a great start. Last week in the equity markets, all three of the major indexes were once again down: the S&P 500, the Dow, and the Nasdaq. Want to shift gears though today and talk instead about equities, about the bond market, about fixed income. Now, historically, a lot of people have considered bonds to be the conservative piece of their portfolio, regardless of the allocation. However, based on what's going on today, this really isn't true. I want to share with you a chart. This is a year-to-date return chart of the iShares Core U.S. Aggregate Bond ETF, AGG, AG. You'll see that year-to-date it's down 8.43%, and this is with some surrogates up there too, and they're all basically in the same boat. Furthermore, one thing that's interesting, this is a new chart showing a conservative allocation fund, which not surprisingly, is heavy in bonds. This conservative allocation fund is actually down year to date, worse than the moderate and the aggressive allocation fund with the same fund family. You'll see that the conservative allocation fund is down 8%, 8.07. The moderate's down 7.92 here. And the aggressive actually is leading the way at 7.84. And this is in spite of a lot of volatility with equities. Now, what we know is bonds have always and will continue to have inverse relationship with interest rates. So in other words, when interest rates are rising like they are now, bond prices will fall. We do expect this to continue. What's concerning about this is a lot of you probably without knowing it, maybe you do have a significant allocation if you're in conservative allocation funds or portfolios to bonds. You may be in a conservative allocation fund at your 401k, or you may even have a target date fund, which if it's near term is going to have a pretty significant allocation to bonds as well. If you'd like to talk about that, we'd be happy to speak with you. You can find us at wealthep.com. Appreciate your time and look forward to speaking to you soon.